I am going to just do a quick review of the Chapter 11. I was trying to get my PowerPoint pulled up, introduction, but I really want to talk about the Chapter 11 investing and financing sections real quick. After that, after we review that first part of the PowerPoint from Chapter 11, and then I'm going to see if you have any homework questions. So can anyone tell me an example of a transaction that goes in the operating section?
Purchase of supplies.
Good, excellent. Purchase of supplies. That's a short-term item that you would use in your operations. I think I heard somebody say another one.
I said payment on account.
Okay, good. Payment on account, because most of your accounts payable are things that you either purchase short-term to operate your business, or it could be that you have paid some salaries payable, right? How about investing? What are some examples of investing activities?
Purchase of land.
Good, excellent.
Purchase of a building.
Excellent. Long-term items. You're going to have a few of these if you have not already done the Chapter 11 quiz. You'll have a few of these on there, so that's one reason I wanted to review them. Anything else? Anything that says the word investments, like if you put your money into a CD, if you invested in another company's common stock, if you put your money into any other kind of marketable security, that's going to be an investing activity. And then financing, how about that one?
Borrowing money.
Good.
Issuing common stock.
Perfect. And there's one more, sorry, borrowing money, issuing common stock, and
Paying dividends.
Paying dividends, good. There's really kind of three in each category. Revenues, expenses, and interest are the operating activities. And then investing, it's buying and selling long-term assets. And notes receivable would be an investing activity. You've loaned out money, and then other marketable securities or intangibles. You'll see that, I think, on the test or the quiz, that when you purchase an intangible item, it's usually a long-term intangible, and so that's an investment. Okay, so now then I'm going to share my screen with you real quick now.
Yes.
Yes, okay, so we reviewed those three sections, and then the investing section we talked about just now has those long-term items in it. So we talked last time about how there's this chart for your investing activities that we're focusing on that has the indirect method. We'll start with your net income, because that encompasses most of the operating activities. It has the revenues and expenses in it. It also has gains and losses. Your net income has the gains and losses in it. And that's what gets confusing to students, because we did not spend a lot of time talking about how the net income also includes gains and losses. But your gains and losses are typically only on long-term items, right? So we just reviewed, and you told me that those long-term assets like land and equipment and building, those things are really needing to be in the investing section, right? But the gains and losses that are attached to those long-term items are already included in this net income. So what we have to do on that chart that we kind of filled out, or there's a place you can fill it out, and on the other PowerPoint, I have a whole slide about it. I'm going to click through some of these because I believe it's going to show up on there. We added and subtracted the changes, right? So here's an illustration. We discussed last time that we don't look at the cash account on the indirect method. We do not look at the cash account on the indirect method. We are talking about how all the other accounts are related to cash. We're reconciling the net income to your total cash. So we look at the change in the assets. If accounts receivables if its balance went from 20,000 to 27,000, it had a $7,000 increase on this chart, right? And we said that if you have an increase in an asset, you're going to subtract that from the net income. If you have a decrease in an asset, you're going to add that to the net income. So on that chart that I was talking about that we filled in or we discussed, it also said that your gains and losses are items that you need to add or subtract from the net income. So I'm going to show you on my whiteboard in a second after we look at this. Here's an example where you sold some land and you had a loss on it. That loss actually has to be added back to net income because you're trying to take it out of the operating section. Now looking at this slide right here, if I sold this land, how much cash did I actually receive when I sold the land? What does the journal entry say? How much cash I actually received?
$6,000.
Good, 6,000. So the loss is not a true amount of cash that I've received. That's the same thing with a gain. A gain is not the true amount of cash that I've received. What we're trying to reflect on the statement of cash flows is how much cash did we come into our business and how much cash went out of our business, right? So the gain or the loss is just a representation of the additional value we received over or under how much we said the item was for. So we actually have to, in a sense, undo the effect of the gain or the loss in the operating section and put the true cash amount in the investing section. So this 6,000 is really what would show up in the investing section. Let me see if I can show you. This is talking about the adjustments on the accounts receivables. So that kind of covers why we move the gain or loss out, because for two reasons. We don't want the gain or loss effect in the operating section. We also want the true amount of our investing activity, the selling of the land or the equipment or the building or whatever, that cash, the true cash we've received, to show up in the investing section. I wanted to cover one more thing on the statement, and it's besides in the investing section. Here's an example of what your investing section should look like. It's not where you add and subtract things. You really just get back to the true amount of cash. So if I bought something, like this says they purchased investments, that's how much negative cash or outflow of cash I had, the 35,000. There's that land we were just talking about. When I sold the land, the true cash amount I received is the 6,000. So the investing and financing sections are actually more of what we call the direct method. They're where you just explain exactly how much it has affected your cash, okay? It's not this, did the account increase or decrease? Do I need to add or subtract? Don't think of it like that for the investing and the financing sections. They're really, think directly about what happened to your cash. If you bought something, you decreased your cash, right? So on the financing section then, there's a couple of things that get confusing to students, and I love this slide because we just talked a second ago, there are really three main things that go in your financing section. You issuing common stock, which means you would have gotten cash, right? So that's why that's a positive 5,000 there. When you pay dividends, you're giving out cash. So that's why that's a negative 12,000 there. And then the other thing would be any payments or receiving of on borrowing money. So those could be inflows or outflows. They could, if I borrow money, it's going to be additional cash to me. If I pay back that loan, it's going to be a decrease to my cash. But students forget that the way we kind of where net income or dividends comes from is inside that retained earnings account. So on your homework, when they tell you things like, here's my beginning retained earnings, and they tell you, I messed up that, I was just looking at that number. If they tell me the beginning retained earnings, and then they tell me the net income, but they don't tell me the dividends, and they do give me the ending retained earnings, I could solve for that one unknown, like if it were an X or an algebra problem. So that is kind of the crux of the financing and investing sections. But let's go back and talk real quick about why we make those adjustments to the operating section. Okay, so that was very quick, I know. Any questions about the investing and financing sections? You feel like you understand the items that go into those two sections? That pretty confident about that, with the land, equipment, building goes in the investing section, and then those three other things go in the financing section. The main thing is going to be looking at on the investing section, and I was going to look at your homework real quick, how much cash you actually did receive on the investing section. That's where students get confused. They try to put in what they sold or the gain or the loss in the investing section, or what the equipment used to be worth or what it was when they bought it. But you really just want to put into your cash flow statement how much you actually received when you sold those items, okay, on the investing section. All right, so back to this slide real quick, talk through a couple of these, and then we'll look at a homework problem. So on your accounts receivables, this one says that it had a $20,000 balance and it went to $27,000. Do you know how accounts receivable would increase? When would it increase?
If you were to do more work, incoming work, and then credited that amount.
Very good. So what Angelo says is I would have recorded revenue, right? He said, well, I did work, right? So if I did work and I recorded revenue, that would have made my net income go up. Yes. But did I actually receive any cash yet on that? No, I didn't. Good. If it increased receivables, I haven't actually received cash yet. So that's why this 7,000 is going to be subtracted from my net income, because it is something that made my net income go up, but I'm really trying to show you the true amount of cash. Let's talk about inventory. This one is a little bit tricky to students sometimes, but if its balance went from 45,000 to 35,000, what did I do with my inventory?
Used it.
Very good. I used it. I sold it. And when I used it, Angelo was right, I record an expense. But did that expense, was it attached to cash? Think about the journal entry. If you used inventory, you would have credited inventory, right? And you would have debited cost of goods sold. So that would have been an expense. Cost of goods sold is an expense. Would have made your net income go down, but you didn't actually pay out any cash with that expense. And so this decrease has to be added to net income. You either have to memorize that chart thing that I'll bring it back up in a second, that says an increase to assets is a subtraction item, a decrease to assets is an add item, or you have to think through these things like I'm talking through right now of how they relate to cash. So let's do the prepaid because it's kind of easy. If it went from 2,000 up to 4,000, what must I have done? How did I increase prepaid rent?
You paid more money.
That's right. That's exactly right. I bought more of it. I paid more cash. So if I paid out cash, I'm going to have to subtract that $2,000 difference to get to the true cash amount that I have left, is what I'm really trying to show, is how much cash do you have left. So you either need to subtract the ones that were dealing with cash or add the ones that weren't. Depreciation is always recorded how? Do you remember the journal entry for depreciation?
Depreciation expense and then
Good.
accumulated depreciation.
Excellent. A debit to depreciation expense and a credit to accumulated depreciation. That expense makes net income go down. Every expense reduces net income. And if we are starting our operating section with the net income, I need to undo the effect of that depreciation since it wasn't cash, right? You just told me it was an expense and an accumulated depreciation entry. That makes net income go down, but I'm always going to have to add back depreciation because it's not a cash item. Oh, that reminds me. There's one other thing I wanted to tell you this morning. Oh, I'm so glad. Okay, so sometimes, and on one of your homework problems, I want to say it's question 9 or 10, it's near the end. you will have some examples, let me find it on the slide, of things that are also called non-cash activities. It's not this one, this is that increase and decrease. Non-cash activities are things that if you, yeah, here's on the very bottom of this, you can see one. If you bought something, this is what this example is saying. I purchased equipment by borrowing money. You went to the bank, you got a loan, let's say for $20,000 on this example here, and you take that $20,000 and you buy a piece of equipment. Do you now have more cash than when you started the transaction? Do you have less cash? No. You went to the bank, you got $20,000. You took that whole $20,000 and you bought a piece of equipment. So we call that a non-cash activity, and instead of putting it in two different sections as a positive in one section and a negative in another section, we just make a note of it. See how it says note X? We make a note of it at the bottom, because those two things would cancel each other out. So instead of showing it in two sections, one is a positive and one is a negative, we just make one line item about it at the bottom. It's called a non-cash activity. Some other examples would be if you issued common stock, let's say $50,000 of common stock, but you took that entire common stock and you paid off a loan. You don't have any more cash total, right? Your net cash hasn't gone up or down. If you issued common stock and you bought a piece of equipment for that entire amount that you issued the stock for, that would also be a non-cash. If the two transactions combined cancel each other out on total cash wise, it's called a non-cash activity. Okay. Questions on that one? So I will try to do a video of a question. Can you see now the homework, or are you still looking at? Okay, yeah. So like several of them are, the first few are this, where it's just part of the cash flow statement. Like this is only asking you about the operating section, right?
Yeah.
But later on, it's going to ask you to do the whole section. And I might work out one of those on a video. But let's just talk about this real quick. What does the operating section always need to start with?
Net income.
Very good. Net income. It always needs to start with net income when I am doing the indirect method. That is the method we are focusing on in this class, because it is actually, both methods are approved by GAAP, but the indirect method is important for corporations to use, because your net income is a number that some people say can be made up or it can be manipulated, and cash is actually a number that is objective and verifiable. I can go to the bank and verify as an auditor if a company has a certain amount of cash. So I need to show the relationship between net income and cash. And that's what this does, is it adds and subtracts all those things that don't affect cash or do affect cash. So then on the problem, it says depreciation expense is $49,000. What do we always do with the depreciation expense?
Add it back.
Very good. You always add it back. So it will always be something that gets added in the operating section. We just talked about this one. Accounts receivables, it says, has increased. And so if my accounts receivable went up, I recorded revenue, but I didn't actually get cash. So I have to put that as a subtraction item. Oh, it's making me choose if it was an increase or a decrease. It was an increase on my problem. So I'm going to have to put that in as a negative. See how it says your cash outflows and any decreases in cash need to go in as a negative. And then my top one says by accounts payable decreased. Oh, we didn't talk about that one yet. So how do you make accounts payable go down? How do you decrease accounts payable?
Make payments to it.
Very good. You pay it off, right? You make payments like Angelo said. So if I have decreased payables, I have decreased cash. They don't work the same way as assets. They actually have the opposite reconciliation on this statement of cash flows. So that's kind of the operating section in a nutshell, right? If they had given me a gain on this problem, what would I do with the gain if they had given it to me?
Subtract it.
I would subtract it. That is right. I do the opposite to get it out of this operating section. If they gave me a loss, I would have added it in. Okay. I want to look at one or two more. Actually, I'm going to skip this one because it's the same thing we just did, right? This one too. This one says investing activities. Oh, good. So here's the thing. A lot of students will look at this, and some of these things are not investing. They will try to put every number on here. This is number 4. But since it's only asking me about the investing section, I only want to put the things that have to do with investments. So it says they sold investments. For 39, this number attaches to that first thing they're talking about in the sentence. They sold investments. When you sell your investments, what happens on that transaction? What do you get?
Cash.
Very good. You get cash. So down here, I don't remember how it comes up. Sold investments, sale of investments. Yeah. I'm going to put this 39 million as, and it doesn't want all the zeros, a positive number. Okay. The next one says they sold land. So that means same thing. Land is part of an investing section. I'm going to put that number in as a positive, 14.1 million. That's the second number. But then the third one says sold its own common stock. When you sell your common stock, your own common stock, where does that go?
To other people.
Say again.
Other people.
I still didn't hear you, Gracie. Sorry.
You sell them to other people?
Yes, you are issuing stock. That's confusing, but yes, you're issuing stock. So does that go in this section?
Yes, no.
No, it
Don't
shouldn't
put
go
it in
this
here.
section.
I know, it's confusing. Isn't that rude of them? They put it in here and we think we need to use it, but we don't. Don't do anything with this third number. Don't put it on there. When you sell your own common stock, you're not buying somebody else's in this. You want to put that in the financing section, and this is only asking you about the investing section. Oh, isn't that rude? The next part talks about the payments out. So these are going to have to be negative numbers. Again, it's talking about my own stock here. Remember, oh, we didn't do treasury stock because I skipped chapter 10 since we ran out of, oh yeah. Okay, well, so I'll explain it to those of you who came to this Zoom session. When you buy back your own common stock, we call it treasury stock. Companies will sell so many shares that it will dilute their value. Have you taken your economics class? Yes. Yeah. Okay. So the more supply, usually the lower the price, right? So if a company wants their stock price to increase, they will buy some of it back off the market. So there'll be less of them out there, and therefore the stock price will go up. Okay. But that is the same thing as common stock. It's just renamed when I buy it back. So that's not an investing activity. That treasury stock amount there, the first one, the 20 million on my problem, I don't do anything with that because that would actually go, treasury stock is something that goes in the financing section. Treasury stock goes in the financing section. Then it says they purchased equipment. My purchasing of equipment is an investing activity, but I have to put it in as a negative number, 21.4. And then the next one, purchase a patent. Remember I said earlier in class, or in our Zoom session, I said purchasing any intangibles is an investing activity. So that will go in the investing section. And it says on my problem, it's 11.1 million. So I got to do a negative 11.1, whoops, there. And let's see, does it give you the total? Yeah, it already does the math for you, it looks like. So, questions on that one? I think the next one is very similar, except it's only asking about financing. So up here, when it says you sold investments and you sold land, don't use those numbers. Only use this common stock, it was the third value, as a positive, and use the purchasing of treasury stock, which is the first number, as a negative. So they give you 6 different numbers, but you only need to use 2 of them on this problem. Okay. This is a whole big, where you do the whole thing. So I can do a video on this, or I think it's more like the next one that I was thinking about doing the video on. Nope, it's the last one, because this is just the operating section. So do you want to cover anything else? Any other questions? I'll try to do a video on 8.
I think this is much more straightforward than I thought it was going to be.
Yeah.
Like looking at it, it kind of looks difficult, but like going through it, it's super easy, I think.
Yeah, I think the first, when you get to this, probably 6, 7, and 8 will be a little more time consuming, but they're not meant to be more confusing. They're just going to be all 3 sections in one problem. And so you're really going to need to use most of the numbers they give you on 6, 7, and 8. It's not like some of these numbers I won't use, but for instance, on 8 here, I need to use this net income to start my problem. That's why they gave you this income statement up here. But the only numbers I would use from the rest of the income statement, I would use the depreciation expense, because we always add that back, and I would use the loss number, because that gets added back. Then down on the balance, this is called a comparative balance sheet. You have to do the math, it looks like to me, where you say the beginning balance of receivables is 65, the ending balance is 86.5, so it went up. Look at the far right as the beginning. It went up by, it looks like 21,500. So if my receivables increased, I'm actually going to make that a subtraction item down here, right? Remember, increase in your accounts receivables. Oh, nuts. There we go. I said it was 21.5, but that's only if you had started from your net income. Remember, my net income was up there 170 or 167, I think. So that's why I say this one's more time consuming, but it's all still the same, like you were saying, Stephen. So.
Okay.
Go ahead.
So you said that would be a subtract? Like
What, did I put it as positive? Oh, thank you. Yes.
Okay, I was just making sure.
It would be a subtract. You are right. Thank you, thank you, thank you. Yes.
A little confused, like why it's a subtract.
Okay.
Positive. I think
Yes.
that's something that's tripping me up a little.
So think about the journal entry that made the accounts receivable go up.
Mm-hmm.
It would have been a debit to accounts receivable and a credit to service revenue.
Okay.
Service revenue is all included in this net income.
Okay.
Net income is all of your revenue minus all of your expenses, plus any gains, minus any losses. That's what this number is.
So it
Included.
more reflects the journal entry.
Yeah, it reflects the journal entry, that the portion that actually doesn't affect my cash. So
Right.
think about that journal entry that I recorded as a debit to accounts receivable and a credit to revenue. It doesn't actually increase my cash. So I have to back it out. I have to subtract it. That's come. I'm glad to see you all.
Mm-hmm.
Okay. Have a good day.
Have a nice day.
All right, you too. Bye.